Over the last 52 weeks or so, my stock portfolio is down something like 20%. So it has not been that smooth ride up like many investors might expect. Instead, it's been a pretty rocky ride down, at least over the last year. And this is at least partly because a lot of the money in my portfolio was added in the past few months, really within the last 6 months or so. And since the start of 2022, the stock market has gone down pretty significantly, and my holdings have not been spared for the most part. Yet, despite all this, my net worth is up 70% during that same time. And no, it's not because my real estate holdings have expanded greatly in value or I have some other investment somewhere else that have gone up to negate any of the stock market losses, but it's for the simple fact that I've been adding money to my portfolio. If we rewind the clock back to May of 2021, so last year, my stock portfolio was around $50,000. That's specifically my M1 Finance portfolio that I do a breakdown on every single month. So it's $50,000 then, but now it's almost $90,000 or right around there. And that's despite having net losses on my positions over the last year of around 20%. And this really puts things into perspective. Despite what the market's been doing over the last year, and especially over the last few months, I've still been able to nearly double my stock portfolio over the last year. And this is where I think a lot of investors get caught up. They pay attention way too much to short-term investment returns, especially while they have a very small portfolio. In fact, they pay attention to investing in general, probably a lot more than they should. Now, this might sound like blasphemy, talking about how investing might not always be the best idea, or at least focusing too much energy towards it when you have a small portfolio. But think about it this way. If you were to invest your money, you got $5,000, $10,000 set aside that you're ready to invest. And that's all you have. You don't have any other investable cash. You have your emergency fund and all that good stuff taken care of. So this is really free cash. Now the question is, what do you do with that cash? Assuming you don't already have an underlying portfolio, you might say, hey, I should start investing. I want to get this thing going. I'm going to pick some stocks that I think are going to do great. Many people often will throw that money into hype stocks or something like that, expecting it to 3x in the next year. So, okay, you put your $5,000 into that stock, and we'll say it does 3x. That would mean it gets up to $15,000 in value. So that's a $10,000 gain on that initial $5,000 investment. You're looking pretty good, at least on that initial investment. But are those $10,000 really gonna move the needle? Are they gonna get you to the promised land of becoming rich and all the great things that have been pitched to you in the get rich quick space on the internet, especially on YouTube and pretty much everywhere, all the fake gurus out there who will try and tell you how you can become very rich very quickly by investing in X thing.
Every person you're on the phone with, they wanna get rich and they wanna get rich quickly.
In our example, you were able to 3x your money, which is pretty phenomenal. But even then, you still are only left with an extra $10,000, which, don't get me wrong, it's nice to have, but it's not really moving the needle towards the path of getting to financial independence, to reaching the promised land of becoming rich, whatever you're going for. If you're going for a lofty financial goal, investing probably isn't going to be what actually gets you there, at least anytime soon. Because there's also a big risk that that investment doesn't pan out and you end up having your investment, especially if you plowed it into some hype stock. That certainly happened to many holdings over the past few months. And meanwhile, you're taking a lot of time and mental energy towards maybe researching that stock, finding that stock in the first place, then investing into it, then paying attention to it, whether you're actually meaning to pay attention to it or not. It can be very tempting and often discouraging when you see the stock go down, and then very encouraging when it goes up. It's a very emotional ride, especially if you're not used to it. So you're spending all this mental energy towards it, and then you get that payoff in some cases. But you could have used that same mental energy towards something else, perhaps doing a side hustle, perhaps building your own business that throws off much more than the $10,000 that you earned on this great investment of your initial $5,000, which again is already a fantastic outcome that probably isn't all that likely when it comes to investing, at least over a short period of time. But if you're actively investing, you're going to be paying attention to stocks and you're going to be researching stocks, and that is time spent. Time that could be spent towards other things that could make you more money, perhaps more easily, perhaps more reliably, and perhaps more quickly. What I'm really getting at is when your portfolio is small, it's probably a lot easier and more sustainable and reliable to focus on increasing your income so that you then have more money to invest. And then the money that you do invest, it moves the needle a lot more because the portfolio is simply bigger. Because it's largely the same mental energy and time either way, it's just the size of the portfolio is now bigger, but you're still putting that same general level of effort in. it's a very scalable thing in that way. But when you're just starting out, it probably doesn't make a ton of sense to focus so much energy on your investments. And this goes to that return on invested brain damage point that Bill Ackman has said before. I've talked about it on the channel before as well. And it's this idea that you're spending mental energy towards something that has a cost in itself. You have to value that in some way. But the time, energy, exhaustion, all that factors into the actual cost of an investment. And you really should consider that when you're making your investment decision. But this isn't to say that you shouldn't invest. And maybe it does make a lot of sense to still do a more active investing approach, even with a smaller portfolio. After all, you're still learning things. This is more like what I'm doing. I'm still taking an active approach with my stock investments, with my real estate portfolio. I'm still spending a lot of time and energy towards my portfolio, even though it's not enough to get me to financial independence at this point, and it's still well below what I want to get it to. But I still spend a lot more time towards trying to boost my income. After all of my working hours are spent towards bringing in more income. And I'm looking for new ways to create new income. Sometimes that's through my investments with something like a real estate deal that's very income focused, but also side hustles and different projects I'm working on. And you could definitely say the tuition of making a mistake in your portfolio would be a lot less when you have a smaller portfolio, as opposed to waiting until you have a big one to make that same mistake. So there's definitely some value there. I'm not trying to say that investing is always a bad idea. But what I am trying to say is that it probably makes sense in many cases to focus more on producing more income, especially while you have a small net worth. Because even when you have a small net worth, you still have the same time constraints as everyone else. You still have the same amount of time in a day. And the decision is instead trying to decide on what would move the needle the most. Is it investing and hoping for a 2 or a 3x in a short period of time, which may or may not happen? Is it focusing your time and energy towards a more certain sort of side hustle where you know you can make more money? Maybe you can work overtime at your job if that's an option, or building your own business and having that sort of scalability there. You can look for all sorts of different opportunities. All I'm saying is that investing, particularly active investing, might not be the best use of your time. But ultimately, it's an individual decision to make. I can't tell you what to do, and I don't know what the opportunity cost of you investing versus not investing actually is. And only you can figure that out for yourself. But I would not expect to get rich anytime soon through investing alone. Instead, it's probably going to come down to how much income you can produce through your job, through your business, through some sort of scalable income, or even not scalable income. It's really about producing that income in the first place so that you then have the money to invest, not the other way around. The investing is probably not going to produce you that same level of income that you could produce by focusing on actually earning that income actively yourself. And that's actively in the sense of a job or running a business rather than active investing. But either way, I'd love to get your thoughts in the comments below on this sort of idea of focusing on producing income rather than investing returns, especially while you have a small portfolio. This video was really inspired by a tweet thread that I wrote a while back. I'm trying to get a little more active on Twitter, so go check that out. Otherwise, if you like this video, like, comment, subscribe, all that great stuff. But until next time, take care.